Warren Buffett says that the best way for most people to invest is to simply buy index funds. So, what's an index fund and how do they work? Index funds are one of the greatest tools ever created for retail investors. They allow you to invest in hundreds or thousands of companies at a time, all in a single investment. Diversifying your portfolio and managing risk has never been easier. Let's use investing into an S&P 500 index fund, for example. $1,000 in this fund would be like investing 76 in Apple, 65 in Microsoft, 38 in Google, 31 in Amazon, 30 in Nvidia, 19 in Tesla, and $741 spread among the other 496 companies. But it gets better. These index funds have professional managers who automatically adjust the percent of each company's weighting in the fund based on their performance. This constant reallocation ensures that your money is always being invested into the best companies. Individual stock picking seems easy, but to successfully do it for decades is very difficult. Things are always changing. Some older companies lose their significance. For example, IBM, while other new companies go public and skyrocket to the top. For example, Tesla. You can save yourself so much time and stress by utilizing index funds to become a successful stock market investor. You won't have to worry about managing your portfolio at all, as it's all done for you for a professional. You can just sit back and watch your money grow. Over the last 96 years, the stock market has averaged an annual 11% annual return, including dividends. The stock market is one of the most proven and resilient wealth-building tools we have, even with every bear market and recession ever thrown at it. So to become wealthy, just combine a consistent investing strategy with patience. Compound interest and time will do the rest. In the next video, I will show you how you can invest in the stock market if you are a beginner.